Okay. Well, hello, and thank you for attending this meeting. First, I want to go through the agenda that you can see here. I'm going to start with the membership ad hoc committee report that will be given by Stu Domashek, who was part of the committee that reviewed sports amenity pricing and structure. Then we will review the results of 2021, the 2022 budget process, review membership data, review the base dues and amenity fee changes for 2022, then go through the cost center budget process, and end on the review of the capital budget, reserves, and outstanding loans. So, Stu, if you want to take over?
About now. Okay, wonderful, thank you very much. The membership committee had a 2021 SMART goal, as indicated up there, review the sports amenity packages, especially golf, for equity, participation, and pricing. Involvement from the golf and greens, joint finance, sports and recreation, and membership committees. This was formed at the end of June. 2 participants from each of the 4 named committees were part of this ad hoc committee, and I would characterize that the participants were a mixture of short and long-term members of the club, short-term being 5 years or less, with a diversity of sports package participation. Oh, the next slide. Thank you. So the first thing that we did was a little bit of benchmarking. We reviewed the membership structure at competitive clubs in the area. You see them up on the slide there, 9 of them. None of these clubs offered a part-time or single membership. 5 of the 9 clubs indicated with the asterisk offered only 1 membership rate that covers all the base and sports amenities, whether the members participated or not. Others offered standard unlimited golf, tennis, etc. And Dalton is really the only club that offers a full a la carte amenity options, giving members more flexibility than our competitive clubs. Next slide, please. So, with regards to the equity issue, we did review all aspects of equity among memberships. We looked at single membership households, where there was no spouse or significant other. We considered family membership where only 1 member played a particular amenity. We looked at the fact that we have part-time members and older members, as well as members who participate in multiple sports, but therefore thereby limiting time in each. Next slide. There was consensus across the ad hoc committee on the following regarding equity. Base membership does not differentiate between part-time, full-time, single member, or only 1 member using those amenities. All members pay the same for access to the club amenities. And I'd also add, we don't differentiate as an island, for example, on initiation fee. It's one price, whether it's a 2-person household or a 1-person household. Same thing for DIOA. We also determined the primary concept of our club is providing members access to sports amenities. How much or how little a given member chooses to participate is a personal choice. We offer many a la carte options. And the realization is we can't customize sports amenity options to fit every circumstance. Next slide. When we looked at amenity dues versus profitability, we started with the 2013 new membership task force that arrived at a conclusion of once a sport reached break-even status, dues would be structured to maintain that break-even status. If a sport generates profit, dues should be adjusted to maintain the break-even status. Over the past several years, golf dues have generated excess profits above the break-even targets. $575,000 were moved to DIC reserves. over the past 4 years. In retrospect, golf dues did not require an increase in 2020 or 2021 based on prior year profits. The same can be said about tennis. In excess of $39,000 of dues is actually over 4 years, not the 2 years indicated. It was the committee's recommendation that amenity dues be adjusted in 2022 to levels that bring each sport to an approximate break even. Next slide. So the committee recommendations, basically 4 key recommendations. One was to combine the unlimited family and unlimited single amenities into one membership category for each amenity. That affected golf and tennis. 2, that we would adjust the trail fee for single member household, no spouse or significant other, for unlimited and restricted golf. And 3, we would adjust the non-package member rates to the guest rate for each sports amenity. In the case of golf, where the 2022 guest fee would be $80, no member of Dog Talk would ever pay more than $80 for a round of golf. Same thing for tennis. And then finally, 4, we would adjust the amenity dues such that each amenity operates at break even based on the unlimited and package dues. And summary, our existing sports amenity structure has worked extremely well. We've achieved break even ahead of the 2020 goal that was stated as part of the 2013 task force. No major structural changes are needed to keep Dog Talk competitive and attractive to new and current members. Recommendation, combine the family and single unlimited amenities into one dues rate, and with a modification of the trail fee for the single member household. Based on amenity profitability, golf and tennis and pickleball dues should be reduced to eliminate the excess profit in each amenity. And finally, these recommendations had the unanimous endorsement of all 8 ad hoc committee members.
Thank you, Sue.
Thank you.
Did you shut yourself?
I did not, I did not.
So now we're going to review the results of 2021. As you can see, the projected revenue and expenses exceeded our budget levels for the year, but we expect to end up with a profit of more than $453,000. The DIC board decided that this year we will set up an operating reserve of $175,000 as a contingency for revenue shortfall and higher than forecast inflation. The remaining overage would be applied to the cart path loan principal. So of that 453 minus 175 would go against the cart path loan, and this was voted on by the board. This slide depicts the profit and loss by amenity, and this was for 2021. Across the board, the club has been profitable in all areas except for croquet due to membership decline during the year. As in the last few years, the golf amenity has been the most profitable amenity. These results were the driving force behind adjusting the golf, tennis, and pickleball fees for 2022. The excess profit in the past years has been transferred to capital reserves, which means golfers were refunding reserves at a higher rate than all membership categories. The goal of the club is to have all members share equally in funding capital reserves. Sports amenity fees are budgeted to break even by covering expenses specifically for that amenity. 2021 was an exceptionally good year for sports amenities. In 2021, resident participation in golf was 52%, in tennis 14%, and in pickleball 14%. Pickleball, being a brand new amenity, was much more successful than we had planned. For croquet, participation dropped a little, but there were 3 additions to unlimited croquet in October. Over 62% of our resident members participated in a sports amenity. This shows that the residents do value the sports amenities that we have provided for them. The DIC gained 17 new members in the year, and there were 22 new country club members. Real estate closings continued to be strong in 2021 at 160 sales through October. 118 were for homes and 42 were for lots. In 2020, there were 148 closings for the entire year. So now I'm going to go through the budget process. The Joint Finance Committee is made up. Did I miss something? Yeah. Yeah. Well, there is a slide missing. So the Joint Finance Committee is made up of 15 people, and I'll read them since it's not up there. Myself, Phil Marshall, who's the co-chair, Jack Sarvin, the DIOA treasurer, co-chair Gary Schmidt of the DIOA as well, and the staff members are Lori Murdoch and Ted Bartlett. And the Finance Committee members are Stu Domashek, Bob Clements, Ann Bunnell, Richard Holbrook, David Elmore, Rob Rochford, Mark Whitlinger, Usman Ismail, Ray McKay, Rich Dutcher, and Steve Clough. We had a large committee this year with 9 new people on the committee, which provided us with fresh perspectives in a number of areas. I want to thank them all for their hard work and vision. Now we go through the budget process. Lori and Ted review revenue and expenses that are initially developed by department heads. All revenue and expenses are forecast on an account-by-account basis. The revenue and expenses are revised after meeting with department heads, and they are reviewed with the Finance Committee liaisons for those departments, along with the treasurer and committee chairs. After revisions are made, the full Finance Committee reviews a completed budget book. Then they agree upon changes or recommendations. Then there is a review by the DIC board, and they suggest and make changes. The results of these efforts is what we are presenting today. The final approval by the DIC board will be in December. So now we'll get to membership data. What we have here is an historical look over the past 4 years in our base year of 2013 when this membership plan went into effect. And that was voted on by the membership. You can see our homeowner membership has climbed over the last 8 years. The new membership plan has been extremely successful. You can see that home site memberships have gone down as developed homeowner memberships have gone up. Logan primarily drove the high rate of development in recent years. Our total resident memberships and country club and dining memberships are now at an all-time high. We have capped dining memberships at 110. There has no cap been put on country club members at this point. Renter memberships are strong. When people come here to rent, they want to participate in amenities. Non-DIC residents are people who were grandfathered under Alcoa. Alcoa originally did not require any type of membership except to the DIOA. We have about 30 of those residents left. Back in 2013, it was 117. We still have members with rights to resign from the club and just become DIOA members. That number is down to about 120 now. As far as amenities are concerned, resident unlimited golf has been the driving force in the favorable results for 2019, 20, 21, and hopefully for 2022. The 2022 budget for unlimited golf is forecast to be 62 over last year's budget. Resident tennis memberships are up 9% over last year's budget. Croquet has remained flat. One of the big surprises is pickleball, where we had a budget of 74 memberships. We have exceeded that by 46. We had a conservative 2021 budget, but still see higher participation next year. Country club membership shows more people are involved with golf. In 2021, grounds packages for golf remained high, even with the uptick in unlimited golf members. We are still seeing many people signing up for the packages right now. Country club member packages will be about the same as last year. The club goal of over 50% of the resident members participating in golf has been accomplished. So now we're going to go through the base dues and amenity fees. The monthly base membership dues are going up by $16 to $393, with 6 of those dollars going to our operations, $10 will go into capital reserves. Our base resident home site dues are increasing by $60. However, $124 more is going into reserves and $60 less into funding operations. The multi-generational fee is remaining the same. Our focus is to keep raising our capital reserves to lessen or eliminate any assessments in the future for any major capital renovations. Remember, any capital project over $250,000 must be voted on by the DIC resident members. This slide is the resident amenity dues. You can see the results of the ad hoc committee's work on this slide. We have lowered most of the sports amenity fees except for croquet. We have done away with single-member sports amenity fees. There is now one sports amenity fee, whether you are in a family or a single residence. The only variance to that is regarding trails fees for unlimited golfers, where a single resident would pay $600 a year less. Amenity packages. We have been consistent with lowering of golf grounds and tennis court package fees. We have also lowered rates for members without packages to be equal to guest rate. Stu mentioned that before. Total amenity. This slide is a little busy. And what this slide shows is the total cost of signing up for all amenities, including base dues for the DIC and the DIOA, and assessments for the golf course renovation loan. So you can see in 2021, if you signed up for golf, tennis, croquet, and pickleball, your annual cost would have been $17,476. In 2022, your annual cost would be $15,644, a savings of $1,832 based on family residence fees. Looking at golf, the savings is $1,700, with the majority coming from the $1,300 reduction of the golf course renovation assessment to unlimited golfers. The $325 golf course renovation assessment to members who are not unlimited golfers goes away in 2022. So even with this year's base dues increases, residents who do not participate in any sports whatsoever will have a modest increase of only $31 annually. And we can come back to that slide if somebody wants to see it later. Country club dues. Base dues are increasing by $11 a month, with $2 going to fund operations and $9 into capital reserves. The increase going to capital reserves is consistent with what we did with resident membership fee allocations. Again, we have been consistent with what we did with resident sports amenities, with lowering sports amenity fees for country club members as well. We also eliminated the single-person category from country club fees as we did with resident members. The country club package fees remain the same for golf, but were lowered for tennis. Renter dues were increased to $475 a month from $450. Renters may purchase sports amenities at the same monthly or package rate as country club members. Dining memberships will increase from $335 a year to $375 a year. We think that this will cause some dining resignations, and that lower number is reflected in the budget. We are forecasting renter and dining memberships to add about $73,000 in revenues to the club next year. Revenue and cost center budgets. Okay. Total revenue is expected to increase by $398,000. Food and beverage increase is $515,000, and resident dues is increasing by $88,000. These are offset by lower golf fees reported as we reported before. So now I'm going to get into the cost centers. Total costs are expected to increase by about 10%. Oh, sorry. Yeah, these are some of the assumptions we made for cost increases are shown here. We estimate salary increases for staff will increase by about 3.25%. For hourly wage earners between 3.5% to 18%. Health insurance is budgeted at a 6% increase. Workers' comp insurance is projected to rise at the same rate as total salary and wage increases. Property and liability insurance rates will rise from 3 to 8%. As far as other cost elements are concerned, managers go through their budget on a line-by-line basis, and they factor increases they expect to see in those specific areas. So we really do not have an overall estimate like 5 to 10% for other cost elements besides salary and wages. It really is done on a line-by-line basis, but I would estimate it would be somewhere between 5 and 7% overall. So we do have inflation baked in at a little higher rate than we had last year. In the food and beverage area, our menu pricing is based on our costs. So there's a formula applied to each menu item based on the cost of the food involved in producing that item. I expect we would see increases in our menu prices this year, adding to our revenue to cover additional costs. So these are the summaries of the cost center expenses. And they're expected to increase by about 10% next year. Labor and benefit-related expenses at $4,837,000, which includes additional staff increase, is increasing by about $550,000 or 12%. The remaining expense items are 5.5%, which include food. So this is our P&L by amenity for next year. You can see the results of all the revenue and cost changes are summarized here. We budgeted to make the amenities come out to or close to break even. The major increase in revenue comes from an increase in resident dues of $88,000 and food and beverage of $515,000. The major expense increases come from food and beverage, $313,000. Most of which is labor. Maintenance and landscape, $99,000, G&A, $50,000, outdoor pool and community center totals $59,000. Taxes and assessments, $28,000, and the sales and marketing, sales center and marketing, $31,000. So you can see we're going to break even with all this. So now I want to talk about the capital budget reserves and outstanding loans, and the capital budget process. And the capital budget process is the same as the expense process. Ted meets with the department heads to determine the capital needs for new equipment and upgrades for the coming year. Ted and Lori then begin developing their capital budget requests. Ted presents the requests to the respective board committee chairs. Then Ted presents the budget to the finance committee for final approval, for final review, then to the board for final approval. During this process, there are reductions and sometimes additions made at every step of the way. So you can see what we're spending our capital on in 2021. And we're expected to spend about $1.1 million. The largest project was the golf course tee renovation of $395,000, which came in $45,000 under budget. The second largest item was the completion of the pickleball courts for $125,000. Other notable items were the purchase of fitness equipment for the community center of $68,000 and painting in the clubhouse for $40,000. The next slide is the capital budget for 2022, and then budgeted to spend $1,376,000. The largest projects are in the golf maintenance area, which include a deep well for water irrigation of $115,000 and a pump house renovation of $205,000. In the pro shop, we need to replace our lightning alarm system, which notifies anyone on the golf course and adjacent activity areas like bocce, tennis, the pool, croquet, of lightning in the area. The current system is about 20 years old and is difficult to maintain. Just try to get spare parts these days. In the administration area, there's a capital requirement to purchase the software for the new ERP system that runs the club's operations. We are going to replace some carpets in the clubhouse, $69,000, and we are going to spend $18,000 toward a master plan that will look at the highest and best use for the remaining properties that the club owns on the island. For example, what should we do with the sales center long term? What space do we need for our community center? And for the clubhouse, the administration offices, landscape and maintenance in golf areas. So we are trying to plan these steps in a thoughtful and sequentially efficient manner. Producing a master plan will make sure we look at all the possibilities so that decisions are made with the best information that we can gather. Capital reserves. This slide shows how we build our reserves. The first component comes from part of our base dues. We have been increasing the capital reserve component of these dues gradually over time, over the last few years anyway. Resident dues pays $44 a month is allocated to reserves, and $25 a month right now goes to paying off the car path loan. Coming up, there's a slide that will show the loan activity. A country club dues of $24 a month is allocated to reserves. The board voted to increase our initiation fee from $19,500 to $24,000 starting on January 1st of 2022. $20,000 of the initiation fee goes directly into capital reserves. $2,000 goes into a pool that pays off equity memberships. Finally, $2,000 had gone into paying off our golf course renovation loan, and that was a covenant imposed by our lender. Since that loan will be paid off in 2021, the board has voted to apply that $2,000 to the golf cart path loan. Capital reserves are used to fund the capital expenditures you saw in the previous slides, and they can range anywhere from $500,000 to $2 million a year. I don't know if we'll get back to the $500,000 range anytime soon. So we expect 2021 will close with close to $5.7 million in capital reserves. This balance is estimated to increase by over $800,000 in 2021 and by over $300,000 in 2022. So we should have close to $6 million or more, I would say probably more, at the end of 2022. And here you can see the amount allocated from dues is $524,000. The amount from initiation fees is $1,170,000, representing 57 new resident members. And again, interest earned is extremely low, as you can see. But I want to take a minute here to talk about our investing of our reserve funds. Our policies restrict the financial instruments into which we can invest our funds. Mainly, these are money market funds and CDs, which are currently providing little returns. Our Finance Committee formed an investment task force to look at the possibility of changing our policies. This ad hoc committee presented compelling information to both the Finance Committee and to the board. They also provided a document that would amend the policy to allow higher return investment options for funds that would not be used for, say, the next 2 or 3 years. This document sets allocation range goals by investment type. A committee would be formed that reports to both the Finance Committee and the board. No individual investment made by a selected broker would be made before formal approval by that committee. The Finance Committee recommended that the club adopt these changes, and the board has approved these changes. An investment committee will be formed next year that will report to the Finance Committee and the board. The committee will be assigned members in the same way selections are made to other DIC committees. And here's another busy slide. But this is a slide about our loans. And this represents the outstanding loans for the club at the beginning of 2021 and the expected activity for 2021 and 2022. In the first column is the golf course renovation loan, which is expected to be paid off in 2021 with residual funding from initiation fees left over. For the golf course renovation loan, unlimited golf members were charged $1,300 a year or $115 per month. Members who did not sign up for unlimited golf were charged $325 a year. Initiation fees as applicable were $2,000 per closing. For the golf cart path loan, all members were charged $25 a month. Additional principal payments of $60,000 in 2021 represent golf package allocations. In 2022, the Finance Committee has recommended that the balance of the profit generated in 2021 that is not allocated to reserves, operating reserves, would be applied to the principal payments against the loan. And as you can see, that would be $278,000 based on the current estimates. The residual amounts from the cart path, the golf renovation loan of $61,000 would be applied to the cart path loan next year. The cart loan portion for monthly membership dues in 2022 is estimated to be $276,000. In 2022, $2,000 from each new member initiation fee would amount to $114,000. Estimated interest payments at this time is $43,000. This may be lower as we pay off more sooner. So the ending balance would be about $430,000 for this loan at the end of 2022. It's pretty certain that if we keep doing things like that, that loan will be paid off or close to being paid off by the end of 2023 and we'll be debt-free at that point. So now I'd like to conclude. In summary, we believe home sales will decrease next year from the record highs in the past 2 years, where we had a 30% turnover. Logan is almost finished building on the lots they purchased from Mr. Walker. However, they have recently purchased home lots from residents for development. Resident memberships will increase with any new development. Sports amenities are popular with new members. Our marketing focus has been shifted to attract people interested in our sports amenities. Finally, membership resignations are minimal, except when residents are selling their properties. Thanks to our staff for going through the time-consuming and arduous budget process and resulting with a break-even budget that we're proud to present. Questions and comments?
John, the thing that jumps out at me is we see almost a 30% increase in food and beverage revenues without a commensurate increase in the cost side.
Well, there's a $515,000 increase in revenue and a $313,000 increase on the cost side. So what that basically does is it cuts our loss for next year by a couple $100,000.
So
But the increases come from a couple of things, more outside events, I believe, and we will increase our menu pricing because of food costs going up. And Lori, if you want to chime in.
We're scheduled to have, I think, we've got 20 or 30 weddings already planned for next year, beginning of this year. So that's a big number.
Are you planning on increasing staff?
Yes, yes, there is an increase in staff across the board.
Particularly in the...
We have in the food and beverage area especially. Yes. Bob?
For those who may not know me, I'm Bob Shields. First of all, thank you and congratulations to both you, the current board, and all your predecessors, some of whom I had the pleasure of serving with in the past. I think you guys have done a great job over many years that I've been here. I want to make an observation and then a suggestion. One thing you were silent on, and many of you that have been here more recently may not know this, but several people paid up front for the golf course renovation. And although we were given an incentive, I won't recall exactly what those numbers were, to do that, so it was a reduction in what was anticipated to be the total that would be paid in monthly payments over the course of the loan. I've been told by people who I think are pretty well informed that the ad hoc committee that looked at this did not even consider equitable treatment for those of us who paid up front. And I've also been told that the calculations, and Lori can validate this, net out that we paid, it turns out, with the forgiveness of the payments in months for the next 4 years, about $2,000 more than those who had paid monthly. So if my observations are correct, my suggestion would be that you consider forgiving the capital portion of the monthly dues for those of us who pay that amount up front, which would come to about $500 a year based on that $44 a month allocation. Over the next 4 years, that would equate to that $2,000.
Okay, I'd like to address this. In fact, this was brought up by me at the Finance Committee meeting in March, because it looked like we were going to be able to pay this up. And I said, well, the members were planning on a yearly, monthly basis from the start. Would only be paying 11 years, or I guess 14,300, whereas the people who paid upfront everything, they would pay, I think it was 15,600 or 16,000. 16,000, so $1,700 difference. And we discussed this for a long time, and this was memorialized in our minutes of the Finance Committee. It was also brought up at the board meeting in March, and we discussed this again. And what we decided on that, people make a financial decision based on the information that they had at the time. So for some people, that was a good decision to pay up front, especially since the estimate for the loan was 18 to 20 years when that first went out. And I think that was stated in the material that was sent out to the club members at that time. So if somebody, we didn't know we were going to get lower interest rates, higher turnover, more people playing golf, that paid down the loan quicker. All these things contributed to that. Nobody could foresee that happening. So we decided that, no, we are not going to give relief to anybody who paid that money earlier.
Well, if I can just follow up on that, then I would offer to you, and I can't speak for everyone who did that, but it was presented to the best of my recollection in the manner that you can help the club by requiring a lower loan amount if several people would pay up front. That would also potentially get us a better interest rate at having to borrow a lesser amount. So many of us made that decision, quite frankly, for the benefit of the club, and we gave up the time value of our money by paying that up front for all of these years. So let me just say, and it's not a threat, but if this club ever wants to do another capital assessment and try to apply those same principles and get those of us who may have the resources to do that, to do the same for the benefit of the club, you're not going to like the answer. You've set a very, very bad precedent. It is totally unequitable for those of us who paid that money up front for the benefit of the club to now be paid what I understand is about a $2,000 extra assessment than those who have been here the entire time and have been paying on their loan that same period of time. That's just not fair. It's just not fair.
Thanks, Bill.
I have a question about you stated the investment possibly would be changed. Just wondering about the timing. Are you contemplating putting stocks in that too?
Well, I think what we would do is put mutual funds or index funds, but not individual stocks.
Well, I'm saying stock funds, right?
Yes.
You're aware that like interest rates are 1.5% on 10-year treasuries. Inflation is over 6%. Stocks are basically addicted to low bond yields. In the past, I realized your investment strategy, the cost there were opportunity costs. Coulda, woulda, shoulda. But now you make a mistake, now you're talking real losses. And that's something I'm not sure a lot of people in here would be real comfortable with.
Yes, and we would limit the amount of that to no more than 25% of the investments.
So that's well over, that's close to $2 million. That's about
Well,
$1 million.
not, it would be only in excess of what we would be using in the next 2 or 3 years.
I just can't believe you're doing this without giving the membership a vote on it, because it's our money.
Okay?
I'm just telling you right now, if you look any valuation measures out there, bonds or stocks, you buy a 10-year treasury bond, and yields go back up to 4%, which is what the 100-year average is on. You're going to lose 25% of your money right there on 10-year treasury. That's a 10-year treasury. And stocks will be actually be even worse. So I'm just telling you right now, just for everybody to hear, this is could be a potentially very, very risky move. And I don't think people are going to be very happy with it. They've got some tough questions for you if you start showing losses in those accounts.
We'll take it.
And
Yes.
Hi, Beth Luigi. Just a pretty minor question, but I wondered if you could tell me the rationale for charging for the tennis amenities and golf amenities. It's the same for a household as you would for an individual. I know it just went down for an individual, but now it's the same. And I'm wondering rationale for that.
I think Stu explained that.
Oh, I'm sorry, I came a little late.
Oh, okay. Yes. So
There was a decision looking at, from a holistic view, that we would combine the family and single unlimited rates for golf and tennis. And that was the only place where there was a single versus family differentiation in any of the sports packages.
So I came with the question because before singles were costing more than a household. I think that's going to level up, right?
Well, we have lowered the fees for this year, and it will be the same going forward. So for residents of
So
one
why-
or two, it will all be at the same rate.
Right,
And
so-
yes, it did come down this year because we did lower the dues so that those amenities would break even.
Right, so why don't we charge by individual rather than by household? Where often there's a single individual in a household place where,
Yeah, everybody
Back to your
has,
first chart. Pardon?
Pardon?
So if I may, from a base dues perspective, which covers your access to the community center, fitness center, indoor pool, outdoor pool, bocce, there is no differentiation in the dues paid by a family or paid by a household that just happens to have a single person. Nor is there differentiation on initiation fees coming into the club for a one-person family unit versus a two-family unit. Nor, if we were to continue the logic, is there a differentiation on the DIOA side of things of annual costs of a one-person household with one car versus two-person household with two cars. We work from that precept to simplify the offerings as it related to unlimited access to tennis and golf.
Thank you.
You're welcome.
okay. Yes.
This is just a question. We charge the same amount for members who live here that are not golfers, who pay green space, golf cart renovation monies, but somebody coming in off the street, a guest, is charged the same. Why don't we give a discount to our members?
Well, they only give allowed six.
Well, I know it's
Six.
6
So
to 6.
we think that's a fair amount.
You didn't answer the question. Did you
Why
answer-
don't we?
Why,
We decided
don't
not
we-
to.
why are you charging the same for people that are just not even?
Well, they're not just off the street, they're guests. They're guests of our members.
But the people that pay, do you not think that they deserve a little more consideration?
We have been charging them much more than our guests before. We just lowered that fee to be equal to a guest fee. Now, if they want to play more, the package rates are lower. I mean, it depends on what you want to, what you want to take advantage of here. We have access to golf, tennis, croquet, bocce, pickleball, whatever you want. And that's what you pay for, is access to those amenities.
Tell her went from 98 to 80. The fee went from 98
Yeah,
to 80.
the fee for a member went from $98 to $80 this year. We did lower it. I don't see that it should be lower than a guest fee.
Well, just because, we participate in the cost of golfing. I see that y'all have made up your mind, so that's fine.
Well, in fairness, I'm not a golfer. I play tennis. My wife doesn't participate in any sports amenity. What we pay as part of our base dues, you do have access to the driving range, the putting, and chipping range. And on tennis, you have access to the ball machine and the backboard. So
I'm well
That's-
aware of that, but we've been members a long time, and initially golfers paid for all golf expenses. We're former golf members, so we know this. So I just wondered why there was no special treatment for people that lived on the island and supported the amenity.
well, I saw that it was inequitable that a member such as myself, who does help subsidize the golf expenses, I would pay more than what a guest would pay. And I advocated for it, as did the entire ad hoc committee, that we bring those 6 rounds that you could buy as a member, tennis or golf, down to the guest fee rate.
Thank you. Okay, thank you very much for coming. This will be, the recording of this will be on the